Good afternoon, everyone. I'm Rezaah Ahmad, CEO and founder of WiseAlpha. WiseAlpha is the first online market for individuals to access the institutional debt market. Now, what do I mean by that? So, I don't know how many of you here in the room have bought retail corporate bonds. I assume a fair few experienced investors will have done. So the market right now is such that individuals like yourself can buy retail corporate bonds through the London Orb Exchange or through retail brokers like Hargreaves Lansdown or Interactive Investor. But then there's a whole separate section of institutional debt, structured as either bonds or loans, which have minimum denominations of between 100K and a million, which are out of the reach of 99.9% of the individuals that are out there. And that's really what our focus is on that 99.9% of investors who can't access this particular segment of the debt markets. Now, the reason why we're focusing on this is because we've seen the huge explosion of growth in peer-to-peer lending and the huge demand from retail investors to find yield or interest rates which are interesting enough and above the current low rates that you've seen in the banking sector, with the straightforward savings accounts that are on offer. And ultimately, we think the institutional asset class, debt asset class, with yields of kind of 5 to 8% in that particular sweet spot that we see, that is comparably much more attractive than what you see in the kind of peer-to-peer space. And it's also above the long-run average return on equities, which is far more volatile. So if I just look into the particular segment we're starting to focus on first, which is senior secured debt, most of the borrowers in this segment are very large borrowers. So if some of you go to our site, you'll see that we've got some of the largest 20 UK companies in there. They're kind of FTSE 350 in size, maybe a little bit lower, but are kind of 1 billion to 20 billion in enterprise value. So they're very large market leaders. The yields on their debt are between 5 to 8%. It's kind of single B to double B rated items. But the key thing is it's senior secured. So it's secured on all of the assets of the company. You've got a pledge over the shares, as well as fixed charges on all of the assets of the business. And that's very important. And there tends to be a very low correlation between the equity markets and this particular asset class. Obviously, unless the end of the world is happening, then everything is going down. In terms of the structure of these types of things, so I'd say about 40% of the companies who issue in this particular market are kind of they're either publicly listed or have a large corporate owner. Then about 60% of the companies who issue in this market are private equity owned. So it's a kind of a real mixed bag. So if you look at some of the companies that we've had on the site that people have invested in, you've got the AA, which is actually a listed company. It's the number one motor roadside assistance operator, Virgin Media, the largest cable television operator, Enterprise Inns, the largest pub operator, again, that's listed. Travelex, privately owned, but one of the largest foreign exchange specialists in the world. There's a whole host of brand name companies that aren't available to the retail investor, but should be. So this is what we're doing. And what we're doing is effectively liberalizing a multi-trillion asset class. Some of the market response that WiseAlpha has had has been fantastic. So we've had quotes such as Money Week saying the WiseAlpha platform is a cracking idea. Pretty much saying that everyone should invest in the platform, which is brilliant. That's their own independent quote. The Mail Online wrote about us saying that we were offering loans issued by some of the biggest European giants. It's generally been very, very positive, and I think we're only going to look to build upon that. And once we see a lot more market participants and journalists start to give us a lot more attention, we really think this is going to become one of the biggest lending platforms in the world, hopefully. The key thing about our business is that we are a technology company. And so we're not a closed platform that you might think of when you look at companies for example, in the peer-to-peer lending space where they're originating their own loans or their own bonds and bringing them into their investor ecosystem. We are actually going to grow through not just individual investor acquisition on the site, but we're also going to be linking in with banks, alternative deposit marketplaces, alternative investment networks, wealth managers, IFAs, because ultimately there's, we think, about 1 trillion of demand for this type of product globally, and it's about us broadening the reach of our way to get to give people that access. And so linking in with networks through online integration, white labeling strategies will ultimately bring that type of volume in the future. If you think about the way the equity markets have been constructed over time, you can see that the reason why the equity markets have developed in terms of liquidity, it's because of both the retail and institutional involvement, and the fact that you've got open exchanges and there's an easy mechanism for brokers and other types of firms to set up around exchanges, and that's being much more problematic in the debt space. You tend to have institutional brokers, but they're still kind of over-the-counter voice. There's no centralized market in the institutional space. It's very difficult, and that's why capital markets fintech is actually becoming one of the most important and most heavily invested in sectors in fintech right now. It's where the biggest opportunity is, alongside insurtech probably. Now, we have a collaborative approach, as I said, in terms of integrating with partners. And so ultimately, we have a symbiotic relationship with banks, who are the ultimate arrangers and underwriters of the bonds and the loans that are issued in this market. We think that's actually going to have a very positive impact upon them. If we bring greater liquidity from both the retail and large investor network pockets to this market, it should free up capital by banks to go out and underwrite and make more loans and bonds, which will ultimately increase the size of the market and give banks a greater flexibility to increase or decrease loan exposure much more quickly, which ultimately benefits the overall financial ecosystem. So there's actually a bigger play here in the future, and ultimately, we've been having conversations with some of the most senior people at some of the leading global banks, and they know that this is where the market's moving in terms of creating a centralized liquid system whereby all market participants can readily get liquidity on currently illiquid assets. Some of the things that we're focusing on in terms of our product development are we are currently at the moment, so if anyone, I think there's 1 or 2 users of our platform here in the room today. So you'll note that most of our product suite is focused on senior secured fixed rate bonds at the moment, just because we think where we are in the interest rate cycle, the fixed term yields are a little bit higher and more attractive. But gradually over the coming 6 months, we're going to be adding more floating rate loans. So individuals who've expressed interest in our product have asked for a kind of a product where there's some protection from inflation in the future, and a variable floating rate type mechanism does help achieve that. And that's something we're going to be listing more of those loans and bonds in the future that have a floating rate coupon. We're also going to be expanding our fixed bond range. So we have our own range of fixed bonds, which we offer, which have defined durations of 1, 3, and 5 year. Gives a bit more certainty for investors about when they can have their capital back. And also they can choose their yield requirements based on that. So we're going to be expanding that range. It's actually, we started that initially, and that's been very popular. We're working very hard to bring more tax efficiency in terms of the product setting. So we are already approved for SIPs. We just have to build our relationships with existing SIP operators and allow their clients to use our platform. We're working on getting innovative finance ISA status in the future, so that we can offer a tax efficient solution again for smaller investors who tend to rely on their ISA for investing. And then in the future, naturally, over time, we plan to kind of go down the path of following my background, which is investing across the capital structure. So, I started my career at Deutsche Bank, structuring loans, bonds, but also investing in high yield, credit derivatives, private equity, public equity, you name it, I've kind of invested in it. And so I kind of have a very good understanding of relative value across the capital structure. And so we're going to be putting some more interesting asset classes which are also currently illiquid and over the counter and very difficult for investors to access online and in an easy format for people to assess. So I think we've got huge prospects in mind, and I think I'm pretty positive about our future, because right now we're kind of one of the only firms in the world who are doing what we're doing. We've got numerous asset classes that we want to liberalize and create liquidity into, and so that's WiseAlpha. I thought it might be of interest, because we're finishing off our presentation now, just to let you know that over the next kind of 3 months we will be opening ourselves up to individual investment, equity investment in our business to expand growth, given the potential that we see there. So if you're an institution or on a high net worth that is interested in being part of what we think is the next global financial revolution, then please get in touch with me. Keep in touch with our site and see the developments that are happening. And finally, I'd like to say thank you very much for taking the time to listen to me today. And if you'd like to catch up with me, we're on stand 18 on the lower ground, and be very happy to talk to you. Thank you very much.